Hello and welcome to the third part of 2023 Imaging paper. So we'll continue from question 31. Let me get my highlighter. Alright, so question 31 refers to the following information provided by a business. So we have three items here. We're going to look at that just now. What is the balance per bank statement? So, which means that we have to use the updated cash book balance and do a reverse. In a normal situation, what we would do to find a balance is we would add lodgement and minus unpresented check. But in this case, we have to work backwards. So we would add the unpresented check and subtract the lodgement. So let me set this out. So the balance for for the cash book is 560. The unpresented check, we will add this. So this is 120. So this is going to give us 680 minus 150. 680 minus 150. And that is 530. And the answer is D. Please confirm. 450, yes. Rose contributed $7,000 in cash and a motor vehicle worth $3,000 for partnership. Her contribution to the partnership would be recorded in the journal as. So we have two assets. So these assets, as in the cash and the vehicle, will be on the debit side, and the total amount will be on the capital section, which is on the credit side. She didn't just give cash, that's wrong. This is also wrong. We have cash and motor vehicle on the debit side and Rose Capital on the credit side. This should be the answer. This has it mixed up. Right, so remember capital, once capital is increasing, you have it on the credit side. Question 33. Item 33 refers to the following balances that appear in the ledger of Mistress Jean Dalton. Alright, let's see what is required of us. What is the total of the trial balance? So first, we need to identify the items that will be on the debit side and items that will be on the credit side. So let's see, machinery is on the debit side. Alright, let me just highlight this something to be on the debit side. That's an asset. Inventory is also an asset, debit side. Purchase is not an asset, but it will be on the debit side. Sales and capital, both of these will be on the credit. So 4, 3, 7, and 1, 8. Okay, 8,000. 8,000 on the credit side and 8,000 will be also on the debit side. And that's there. Item 34 refers to the following list of balances for a manufacturing company. What is the cost of the goods produced? Okay, so this here is basically going through the manufacturing account, but they give you a simplified margin or a simplified list of items that you will use. So instead of having, starting with open inventory of raw material, they go right ahead and give you the direct material. So you have direct material, direct wage, that's $8,000. We have indirect expenses. We have indirect expenses, and I'm a bit confused here because indirect expenses indirect expenses, could this be overhead? Alright, I will treat it as overhead and we'll check it back later. So we have 3, 5 and 3, 8, 8 and 3, 11, 11,200. And then we have to factor in the opening WIP and closing WIP. So 11,200 for open WIP, you add the open WIP and then WIP is work in progress, that is. You add the opening WIP and then you was the closing with. So the opening with is 1600, closing with is 1700, and I have here 11,100. Just double check 8,100 is not an option, so definitely have to consider this in. Yeah, I was checking to see if you had to omit direct expenses, providing that it's an income statement item rather than a manufacturing item. Then the answer is not there. So the answer for this is definitely C. 35. Inventory was bought from Miss M. Smith on credit and posted to M. Smith's account. How would this transaction be corrected in the journal? So we would have to remove it from M. Smith and put it into M. Smith. It was bought on credit. So we're supposed to get the credit value for M. Smith. So we're going to credit M. Smith and we're going to debit M. Smith. Debit N, debit N, debit N Smith and credit N Smith. Okay, that's a bit difficult to pronounce. Which of the following items on a statement of financial position would differ most in presentation when comparing books of a company and books of a sole trader? So this definitely will be capital. Assets, yeah, you can have the same assets, you can have the same liabilities, just probably we might have debentures and so instead. Those are one or two items. Current asset will be the same thing. But capital section is going to be way, way different because we're going to have in company, you're going to get authorized share capital, issue share capital, then you'll have premium and reserves, etc. Whereas sole trader, you just have opening capital. Sometimes you have drawing profit and closing capital. That's it. 37. Dina Williams is a petty cashier. If she has a float of $200 and she spends $180, how much should she be reimbursed at the end of the period? You will be reimbursed the amount that is spent, and the amount spent is $180. Right, so you reimburse that amount to keep the float at $200. 37, let's go to 38. A businessman bought a new computer for $6,000. So we have a new computer for $6,000. He paid $4,000 in cash and traded in his old computer. What is the entry to record this transaction? So, alright, so we have a new computer. This is an asset coming in, so therefore we debit this new computer. And in order to finance this computer, he did two things. One is he traded in his old computer that will be valued $2,000 because he paid $4,000 in cash. Cash is going out of the business. That old computer is also going out of the business, which means that those two will have to be credited. Those are assets that are going out. So we're gonna debit the new computer, $6,000. Okay, the old computer cost is not. XD. Yeah. The company's rent expense. Okay, get this. The company's rent expense account had an opening debit balance of $2,000. Alright, what is the rent expense recorded for the year? Let me draw a T account. Alright, so this is very straight. So this is debit. This is credit. And these figures are going to look ugly. Anyway, so we have an opening balance of $2,000. Alright, so I'm gonna move this a bit. No. Yeah. Alright, during the year, $6,000 paid. So let's come here. And we put $6,000 here. And then we have At the end of the year, there is a closing debit value of $1,500. So this value here is when you add up. Alright, so you add up, you have your line here, your subtotal line followed by your total line. Alright, this is very difficult to draw. No. Alright, so here is that. So when they say we have a closing debit value, it means that the carried out value here, balance brought down, is shoot. There. Okay. Alright, so this balance brought down. I'm having a bit difficult here. Let's see. Alright, sorry for that. Sorry about that. Anyway, so we have the opening debit balance. We also have the amount that was paid. They are saying that at the end of the period, there was a closing debit balance. So this debit balance will be on the debit side. So this here is what you would call the balance brought down. Balance brought down. And the balance brought down is actually 1,500. The balance brought down is going to be right here as the balance carried down. And we're going to put back the 1,500 here. And the amount that is missing is supposed to be here. How much is missing? So we add up this, and this is going to equal 16 to is 8,000. Obviously, if 8 is there, 8 has to be here as well. So 8,000 minus 1,500, and that figure is what is missing from the top here, and this is 6,500. So the answer here is actually 6,500. So this question here is basically working backwards, and I'm not getting to underline this thing. Alright, so this question here is, why is this giving me so much problem? The answer here is B. Which of the following financial documents show the net earnings of a business? So let's look at them. Net earning, this is basically, this you can refer to this as capital, but technically it's not. What did I say? Not capital, it's actually profit. Income statement is a good answer. Appropriation account, no. Appropriation account basically deals with sharing out of money. Statement of financial position shows where you stand, not your earnings. Receipt and payment account, no. Receipt and payment account will sound somewhat like SOFP. Items 41, 42 refer to the following information extracted from the records of LT Limited. Alright, so here we are asked to find the gross profit on the FIFO and then AFCO. Alright, so you have sales, purchases, and we have inventory. We have the closing inventory. So the normal thing is we have sales, we have opening inventory plus purchase less closing inventory. But in this case, we don't have an opening inventory. So what we would have is sales minus purchases and minus closing inventory. This is what we'll use. So we have 45,000 minus. So we have 45 for this. Alright, for question 11, because question 41 and 42 will follow the same pattern. So we have 45,000 minus 10,000 minus 5,000. So this here is 45,000 minus 5,000, and this is going to give you 40,000. Right, so the answer for this is going to be 40,000, and that's D. And this other one is AFCO. AFCO is So 45,000 minus 10,000 minus half goal is 2,000. So minus 7,000, and that's 38,000. (43) In preparing the final accounts, a business omitted return inwards. Which of the following items will be affected by this omission? Return inwards mean goods are coming in. We made our sales and people return goods. So this here is a sales return. So what are going to be affected? The net sales, definitely you're supposed to minus the inwards from your sales. Net purchase, no. Gross profit or loss, yes. So the answer is 1 and 2, and that is it. Karen and Gart, partners in a business, share profit and losses in the ratio 2:3. Okay. What are their respective shares if the business makes a net profit of 3,600? So basically, you divide this here by the total number of shares. So 3,600 divided by the number of shares, and total, we put this bigger. And the total number of shares 2 plus 1, that's 3. So 1 share is equal to 1,200. Right, so which means that Gart is collecting 1,200 and Karen is 12 times 2, and that's 124. Karen 24 and Gart is 1,200. If you add up these two figures back, you're supposed to get 3,600. In the books of a partnership, the salaries of the partners should be, so we're dealing with salaries. Alright, so when we're dealing with salaries, it means that the amount of money you have in the business will be increasing. Therefore, the capital you have in the business will increase, and therefore you have credit values. So let's look at it. Well, debit definitely ends here out. Credit in the appropriation account? No, it has to be debited in the appropriation account, so it will be credited in the current account. Right, so the answer is D. Credited in the partner's current account, and here is question 46. You can take a look and guess the answer for now.